Franklin Allen, you said that China is a miracle economy, but it is not a miracle stock market. Could you explain what you mean by that?
Well, first of all, China has a tremendous record on growth. It's gone from being a small fraction of the US, about 10% or so, several decades ago, to last year overtaking the US and becoming the largest economy in the world in terms of purchasing power parity. Along the way, hundreds of millions of people have been lifted out of poverty, and now they lead middle-class lifestyles. They have cars, they have washing machines, all the kinds of consumer durables, and they have nice apartments and air conditioning and all of the things that make life more comfortable. There are still hundreds of millions of people in the countryside that don't have those kinds of lifestyles, but hopefully those will come going forward. Now, many people believe that if you want to make money in the stock market, you should go to places where there is lots of growth opportunities, because those provide potential for making money, and in many countries that's true. But in China, the stock market has not performed well. In fact, you would have been better off in real terms in many periods just putting your money in the bank.
You also said that the firms that are listed on the stock exchange, as we said, the firms whose shares are traded on the stock exchange, are not necessarily the most profitable and well-run companies in the Chinese economy. How come that is the case?
When they set up the stock markets in the early 1990s, the original aim was to raise money for state-owned enterprises. And over time that's changed, but it's still the case that the majority of companies listed are state-owned enterprises or the subsidiaries of state-owned enterprises. And those companies are ones that were listed not because they were good companies in terms of creating lots of value for shareholders and so on, but because they were politically well connected and they had a record of positive earnings for at least 2 or 3 years.
So will this situation change in the future? Are there plans to improve the workings of the Chinese stock market, and how long will it take if there are changes?
So the major reform that I think that China's economy needs is to open up the capital account so money can flow into China easily and money can flow out of China easily. That's something that, as I understand it, the Chinese government is committed to do. It's a difficult thing though, and it's a bumpy process along the way. I think it'll take quite a few years.
There will most likely be flows in and flows out at the same time. Is there
any
way to have an idea of what the net might be?
That's the big question, is what the net might be.
Yeah.
And people have done studies which looked at other economies that have opened up the capital account, but I think they're of very little guide as to what will happen in China.
Okay. Thank you very much, Professor Allen. Thank you.
Thank you, Pat.